In this video, I'm going to show you how I use moving average in my actual trading strategy. In this case, I prefer to use exponential moving average, EMAs, rather than MAs, because exponential moving average are, let's say, less delayed than actual moving averages. Because you need to have in mind that moving average and exponential moving average are lagging indicators because they are a derivative from the price. So everything that is displaying from an exponential moving average or a moving average is an actual data that is delayed. That data is a lagging indicator, not a leading indicator such as open interest, volume, or price action. So for using EMAs in my actual trading strategy, the first thing that I do is go here in the indicators tab in TradingView and search for 4 EMAs. This indicator here by the treasury. Once I click this indicator, I add it to the chart, and the settings that I personally like to use are the 200 EMA, the 100 EMA, the 50 EMA, and the 365 EMA. As you know, the dead cross or the golden cross is when the 50 EMA crosses the 200 EMA to the upside or to the downside, and we can consider this in the daily time frame as a dead cross or a golden cross, okay? And also the 365 EMA is useful to me to know in the daily time frame where is the yearly average of the price, okay? So now, as you can see here, the 365 is, let's say, the price line. I like to have it activated, okay? And I'm going to change the color to blue and also the boldness, okay? So now, for example, we are in the Ethereum. We are going to analyze the Ethereum chart, okay? And as you can see, the EMAs usually they act as support or resistance. So if we are in an uptrend, in a strong uptrend, we can see that the price will bounce from the 50 EMA. You see the 50 EMA is the thinner one, the 100 EMA is the bolder one, the 200 EMA is the bolder, okay? And this is the 365 EMA, okay? So if we are going to have, let's say, a price pump or we are in a strong uptrend, the 50 EMA will act as support, okay? Also the 100 EMA, as you can see here, the price bounced here for the 50 EMA, then retrace, touch the 100 EMA, and you can see that the rejection from the 100 EMA in the daily time frame was pretty precise, okay? You see it touches and then bounce, okay? And it gives a major uptrend. And now, again, the 50 EMA is acting as support. Now that it's broken, the 100 EMA is acting as support again, okay? Also the 200 EMA acts as support. And also, in the future, the 365 EMA will act as strong support, okay? And the same is into the downside. So if you focus on the downside, in a downtrend, okay, you can see that when the price bounces back into the 50 EMA, it got rejected, then bounces back into the 100 EMA, got rejected, bounces back near to the 200 EMA, got rejected, okay? Now, the 365 EMA is acting as support and resistance, is flipping this level, okay? Again acted as resistance, okay? And then go to the downside. So you can see that the actual EMAs act as support and resistance depending if we are in an uptrend. So if we are in an uptrend, the 200 EMA, the 50 EMA, the 100 EMA, and the 365 EMA will act as support. And if we are in a downtrend, the 50 EMA, the 100 EMA, the 200 EMA, and the 365 days EMA will act as resistance levels. So we can expect a rejection whenever the price is reaching these EMAs, and the price will get rejected and bounce to the opposite side, okay? This is important because we can identify the actual, let's say, trend, if we are in an uptrend or a downtrend that we are in, and also we can identify the support and resistance levels. Why the EMAs are working so well as support and resistance level? Because a lot of traders use EMAs for like trading indicators, and they base their strategies based on these simple EMAs. The issue and why I use the EMAs just as an indicator for searching just for confluence is because it's a lagging indicator. So for entering trades in spot or perpetuals and have, let's say, actual profits, quick profits, and read the market in the real time, you need leading indicators. Leading indicators such as volume, such as open interest, such as support and resistance, such as VPVRs, okay, such as liquidations. So you need leading indicators to take advantage of the market and enter the positions as early as you can to, let's say, outperform the traders that are using lagging indicators. Because, for example, RSI is a lagging indicator, EMAs are a lagging indicator, MACD is a lagging indicator, okay? So all the traders that are using lagging indicators, they have a delay in the data. So you are, for example, a trader that uses EMAs as trading strategy, okay, and they use the golden crosses or the crosses between EMAs. When you, for example, see a golden cross, okay, when the 50 moving average or exponential moving average is crossing the 200 moving average, that is this point here, for example, in this particular case, the uptrend has already begun. But if you read the price action and the volume, you will see here that a lot of liquidations, log liquidations happen, that the price is rejecting from this support level, okay, and has liquidated the previous lows, okay, and then the price is bouncing again. So if you enter here, you buy spot here or enter long here, you are outperforming the trader that entered the long here because it got the golden cross, okay. And even if he got the golden cross here, the price bounced back to liquidate the stop losses that the lagging indicator traders use here. For example, if you use this golden cross and then the price pump, you put a long here, enter long here, okay? Let me make an example. Sorry, I don't know why it's not working. Now it's working, okay? So for example, you say, okay, now we are in an uptrend because I got the golden cross, okay? I got the golden cross here, okay? So now I enter long here and I put my stop loss below the last swing low, okay? So I'm expecting a bounce, but the price reverses to trigger your stop losses and then goes to the actual uptrend, okay? And this happens many times. That's why I don't like to rely on lagging indicators such as EMAs, but I like to use them in my actual trading strategy as a confluence indicator, as a confirmation indicator, not as my main indicator, but just as a confirmation, as a confluence indicator. Because lagging data is useful because it's based on past events, so it's making us, let's say, strong levels that are based in a lot of data. Because in the daily time frame, the 200 EMA moving is the average of the last 200 daily candles, okay? And the 50 EMA, for example, is the average price of the last 50 days candles, okay? So we got a lot of information on these levels, a lot of, let's say, probability of these levels that having strong support and resistance or supply and demand areas in the chart, okay? So I use EMAs, but not as my main trading strategy because it's very lagging indicator. And for taking advantage of the market, we need leading indicators. We need to be ahead, act quick on the price action and on the price movements to be ahead and over trade or let's say to outperform the traders that are relying on lagging indicators, okay? Also, to finish the video, I want you to know that I'm using for this example Ethereum in the daily time frame, but you need to know, as I always said, that indicators and price action and EMAs strategies are fractals. So you can apply these strategies in the 4-hour chart and you see that it worked the same. The EMAs act support and resistance levels, and they flip, okay, when it act as support, then again act as resistance, and vice versa. So they act as support and resistance in whatever time frame, okay. The issue is that the lower the time frame, the lower the probability that these EMAs will be respected, will be acting as support and resistance, and the higher the time frame, the higher the probability that these EMAs will act as a support or resistance or supply and demand areas in the chart. So you need to have in mind that EMAs, as everything in trading, is fractal. So the lower the time frame, the lower the, let's say, the importance or the probability that this level in the chart will be respected by the price, and the higher the time frame, the higher the probability that this level in the chart will be respected in the chart by the price, okay? So that is for today's video. That is how I actually use the EMAs in my actual trading strategy. So also, to finish, because I forgot to mention, the spread of the EMAs is very important, because the most they spread, okay, you see that they are spreading. The 50 EMA is very far away here from the 100 EMA, and the 100 EMA is very far away from the 200 EMA, and the 200 EMA is very far away from the 365 EMA, okay? So the higher the spread between the EMAs, it means that the stronger the trend is. So if we are in an uptrend and the EMAs are very spread, we can assume that we are in a strong uptrend, okay, like right here, okay, we see strong uptrend and the EMAs are spreading. And in the opposite side, if we are in a downtrend, okay, and the EMAs are spread a lot, okay, the distance between the EMAs are a lot of spread, we can assume that we are in a strong downtrend. And obviously, when this space between EMAs is closing, okay, so we see that the EMAs are beginning to close and the spread is being reduced, we can assume that we are finding support and the trend is trying to reverse from a downtrend to an uptrend, and now we are trying to reverse because you see that the 50 EMA is approaching the 100 EMA. We are trying to reverse from an uptrend to a downtrend, okay? Obviously, we can have fake signals, okay? Because here, for example, we got a dead cross, but the actual uptrend was intact, so the price bounced again. But this is just a measure to gauge the strength of the trend that we are in, okay? So the more spread are the EMAs between themselves, the higher the strength of the actual trend that we are in. So if you like the video, give me a like, subscribe to the channel, and as always, follow me on my Twitter account, on my Instagram account, on my Rumble account, and obviously on this YouTube channel. And you can visit also my website. So thank you for your time, and we see you in the next video.